Real estate investors are slammed with the new capital gains tax hike. Yeah. How's this going to impact your investment properties? And how's this going to impact the real estate market overall? Stay tuned as I'm going to break this all down for you, and pretty sure it's going to get controversial. Pretty sure. And if you, after watching this video, if you want to chat with me about your investment property and what kind of options you have, what the deadlines are, and the impacts of all of this on you personally, you can book a call with me. Use the link that's on the screen. It's right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zen, and if you're enjoying the content I'm putting out there, do me a favor and like and subscribe, so it helps get a lot of information out there to other people. Capital gains, capital gains, capital gains. I think of all the things that came proposed from the Canadian federal budget and all the real estate stuff, this is probably the biggest game changer for the real estate market that actually came out. And it wasn't under the real estate banner, it was just under the everything banner, right? So this is probably like way more than the real estate policies that came out and how much those will have an impact on the market right now, because those are very long-term things. This one is pretty imminent, right? So I'm gonna break this down into 3 segments of the video, and you can feel free to jump into whichever one you want based on your own interest. So these 3 segments will be: 1, what happens with the new capital gains inclusion rate and the implications that it has on your investment properties. That's number 1. Number 2, what impact will this new capital gains tax inclusion rule have on the entire real estate market as a whole? And 3, this is probably where I think it's like semi-controversial. My take on the new policy, and yeah, like I said, it's probably getting a little bit political, but I'll give you my take on it because there are some things that are interesting. So number 1, how's this going to affect your investment property? Well, the first thing you have to realize is that capital gains tax affects your properties totally differently depending on how you are holding your property, right? Let me explain. If you're holding your investment property under your name, meaning Jane Smith or John Doe owns investment property, that's your personal name, you will have a newer, higher capital gain tax that only starts if you have made more than $250,000, right? So if your investment property from when you bought it to when you sell it has gone up more than $250,000. So keyword here is more than $250,000. As a short reminder, your capital gains tax is 50% of the appreciation. So if your property appreciated $250,000 when you sell it, half of that, or 50%, is subject to capital gains tax, or $125,000. And that $125,000 gets added to your personal income, and you get taxed on it at a marginal rate in a layman's explanation, right? Effectively, that's 50% and more. That's, again, the simple way of explaining it. And it's obviously more convoluted than that because our Canadian tax system is way too complicated to explain in like a 10-minute video, but I digress, right? That's just a layman's way. So anything over $250,000 is when this new capital gains tax goes from 50% to 67%, or 2/3. So I've broken this down in a chart over here showing you what your taxes due are if you sell, and you will be affected. Obviously, it depends on what your capital gains are. Now, it does start to add up over time if you have capital gains tax over $250,000. But let's be real. Let's look at this chart here. You wouldn't be seeing any of these kind of capital gains taxes levied on you unless you essentially bought real estate around 2019 or before that, just strictly based on the appreciation of the average price in the Toronto real estate market. So something to keep in mind. Any new investors in the game? Probably not effective. So is it that big of a deal? Well, on surface, no, but I'll explain why it's a bigger deal than most think later on in this video. And that the 0.13% the Liberal says affects, yeah, I don't think that's true. Now, where this does affect a lot of people outside of that 0.13% are investors who own their properties inside corporations. Now, this little snippet I've taken directly from the federal budget, and they essentially just, casually slipped in the new capital gains tax inclusion of 67% for anything that is inside a corporation. Let me repeat myself. Anything. There's no 250 kind of precursor limit. It's just anything. So if you own investment properties inside a corporation, this affects you right away. It kicks in right away. There's no 250 cap. So effectively, the amount of taxes you'll be paying if you sell your property increases by 30%, high level. So you can take a look at the chart over here. Yeah. So hopefully this gives you some insight on how it may affect you, because how you hold your property is going to differ from everyone else, right? And everyone's scenario is different. So after seeing this, if you want to chat about whether you should be selling before the deadline of June 24th, you could book a call with me using a link that's on the screen right here. It's www.chatwithzen.com. And from me calling to some of my clients and people calling me about this, I already know there's a lot of confusion. So I've done a little bit of research with my accountant to kind of give you what I think is out there and what the information is. And for clarity purposes, a lot of people were probably confused about whether it's the agreement date of June 24th or the closing date. It's not clear right now, but I suspect it's the day the title is conveyed, which means the closing date. So if you do want to beat that time is of the essence right now, because we're like 2 months out, right? There's closing time for it. Number two, how's this going to affect the entire market? Well, in short, I would not be surprised if there is like a spike in listings added to the spring market, like the stuff that's already coming. I would suspect more of it. And a lot of that stuff is already starting to pile up, and the active listing is quite high right now. I would probably say this will be like negatively affecting the condo market the most, right? Because most investors are in that kind of condo space because it's more tolerable in the GTA. Although I wouldn't be surprised if I see some like larger freehold homes that are multiplexes that come onto the market to sell to try to beat the June 24th date. And the commonality I'm going to see with all of these are that they're all going to probably have a tenant inside, because they're investment properties, they're going to be tenanted, and they're selling quickly. So in the long run though, I do think this will restrict inventory, since the taxes on selling an investment property, effectively just went up like 34% for most people. So I would say you will start seeing this reduction in inventory after June 24th. And this is just like a second order effect, kind of similar to when they brought in rent control to try to taper things down. And obviously second order unintentional effects meant that, rents increased, right? So once the June 24th day passes, I suspect there'll be probably a lot of people who own investment properties that will go with the buy, borrow, and die kind of strategy, or just find a way to pass on the shares of the corporation to whoever's next in line, instead of disposing the actual asset or the property until the capital gains rules changes again, right? The incentive for selling after June 24th just got kiboshed, and the whole saying goes, show me the incentive and I'll show you the outcome. And right now, simply put, after June 24th, the incentive to sell an investment property is really, really low. It's ironic because I would say the federal budget had some pretty good housing policies, at least that we've gotten as of late from the federal government in the last few years. But this new cap gains kind of inclusion rate, I think kiboshes some of the things that they're trying to do, and it's a little bit more damning than I think what they would want to say in the short term. Number three, here's like my take on this policy. At first, it's kind of like, oh crap, right? It's a shock. And you know what? You kind of just got to roll with the punches, right? You can't really be upset over, spilled milk, right? But here's what I will say. It's not that we haven't seen higher capital gains tax before, meaning like this higher inclusion rate. Because if you look at this chart over here that I pulled straight from the Canada website, it's been at 75% before in the 90s. So this isn't new. Now, is there a chance that this could change with the new government? Yeah, maybe. Could be part of their election campaign? Maybe, right? I think my biggest issue with this isn't the whole socioeconomic class warfare that the government is pinning against one another and whether it's fair or not. It's more so the value of the new tax. If I am paying it or someone is paying it, is it worth it, right? I've always been like a value guy. And the question I'm kind of asking myself right now is is the additional taxes I'm paying, the money that I'm paying, worth it in short? Right? Because if it is, honestly, I don't mind paying it, right? If I'm getting good value for it, sure, whatever, right? But at the moment, I just feel that we're not with this new cap gains inclusion rate. Look, I get it. The government is starving for tax revenue because, there's a lot of deficit spending. That's fine, right? But maybe I would say instead of spending more money on programs in an inefficient way, let's put it, just reduce the deficit, right? It's simple. Run a balanced budget. Where I think a lot of people may misunderstand this whole thing and why they think it's actually fair for this to come in are the unintentional consequences that I've heard as of late with my clients and other people. And I think it's unfair to those because they're being now taxed more and kind of without warning, to say the least, right? So the budget says that it's going to affect 0.13% of the population who, rely on capital gains for income. Sure, not a problem. That's a very small, minor amount of people in the population. Let's call them the ultra rich, right? But there are a lot of normal Canadians who are unintentionally screwed by this and who rely on capital gains of their assets when they sell for retirement. And it's kind of crappy, some of these stories I'm hearing. Case in point are doctors who don't have retirement plans. There's no CPP. They're allowed to buy stocks in their medical corporations in Ontario, which usually is their retirement plan. So imagine this. You're a doctor who just busted their tails off during the pandemic because it was chaos and there was not enough people working. And you've now accumulated some savings and you're hoping to retire because, it's been chaos for the last few years. And now that you're retiring, you just realize that the government is now forcing you to pay an additional 34% on taxes on your capital gains. It sucks, right? And here I thought Canada was trying to incentivize more doctors to come and work here because we have a shortage. But yeah, I feel like somebody didn't think about that, right? Or another one is like maybe someone who's been a real estate investor for a long time. They have one extra property that was their retirement plan because they have no CPP or no pension, and poof, if they were to sell it right now, there was a big chunk of that retirement out the door without warning, right? I think that's the unfair part. So there will also be like a lot of other secondary effects that come along with this as well. One secondary order effect I can think of right away is like, what if a lot of people start plowing more money into their primary residence as, getting as large as possible because it's one of the only few ways that's essentially tax-free in Canada, right? Another potential is that we may have a nationwide brain drain in kind of like productivity because, people aren't going to be rewarded for their risk in business. And, Bank of Canada's already sounding alarms you can see over here on our productivity, right? So these are just a few kind of off the top of my head kind of secondary effects. But as with most things, I think the market will adapt and we'll see. Ultimately, it'll be fine. I'm already talking to my accountant about like alternative options for our clients right now and if they have to sell, and stay tuned for how some of this will pan out. Hopefully this gives you some insight into what these new capital gains taxes mean for you. And if you are concerned about your personal situation and your investment properties, you could book a call with me using the link that's on the screen right here. It's www.chatwithzen.com, so you can chat about your personal specific situation about your investment properties. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one or this one? You know what? Just watch them both.